from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Bitcoin set for its worst quarter in more than a decade, sliding more than 6% to below $19,000 for the second time in 2 weeks. What it means and how low can it go? We'll discuss. Plus, Washington is finally taking note of sexism that's run rampant in the tech industry, where women have been long underrepresented. I'll be joined by Congressman Stephen Lynch on the heels of a hearing he chaired on, quote, combating tech bro culture, what he thinks Congress can do to help fix the problem. And airlines are canceling flights up and down the board as they struggle to keep up with rising demand. We'll talk about what's ahead for the busy 4th of July travel week and the future of travel in a post-pandemic world. All of that in a moment, but first I want to get a look at the markets. Recession fears are back, sending stocks down across the board, with tech leading those declines. This rout now puts the first half of 2022 in the history books. Bloomberg's Ed Ludlow has all the latest on the biggest moves. Ed?
Yeah, we got data that showed consumer spending fell for the first time this year in May. It's really reinforcing those recession fears out in the market. Big drops across the major indices, including the tech-heavy NASDAQ 100, Philadelphia Semiconductor Index, or SOX, an index of chip makers. And I keep going back to the US 10-year yield, down another 7 or 8 basis points. It was in mid-June that we were at a decade-high 3.5%, and when yields were rising, we saw pain in tech stocks. Well, yields are coming down, and look at the red on the screen. It's June 30th. We're halfway. We made it, Em. We're halfway through the year. Let's look at where we are 6 months into 2022. Mr. Director, bring up that board, because frankly, it's not been great out there. You look at the declines we've seen year to date on the S&P 500, worst start to a year, or worst first half of the year since 1970. NASDAQ 100, worst first half of the year since 2002. Philadelphia Semiconductor Index, worst first half of the year on record. I can go on and on and on. It's not a pretty look. I think what's interesting, if you look at this Bloomberg terminal chart, is how bullish analysts are on some of the mega cap tech names. Lots of buy ratings, a lot of high price targets. That seems a world away from the narrative that I'm hearing out in the marketplace when we speak to investors, when we hear from analysts. There's bullishness. Are they just behind the curve, or is something going to change, turn around? Finally, a very interesting barometer of what's going on in the world is one of the chip makers, Micron, reporting earnings after the bell, giving a forecast for the current period well below analyst estimates for revenue, saying that revenue will come in $7 billion in the fiscal fourth quarter. The street was looking for 9.2. Basically, consumers are pulling back spending on smartphones and laptops. What does that mean? Less demand for memory chips, and that is not a good look for Micron.
All right, Ed, thank you. I want to stick with the current market moves, market turmoil, bring in Up Holdings' Robert Cantwell to talk about the pain that most investors are feeling. The S&P suffering its cruelest first half since Richard Nixon's presidency. Ouch, that is a dismal statistic, Robert. Look, we talked last about a month ago. Have your feelings changed given that we're continuing to see red on the screen?
Well, it's gone up and down since we last spoke, but we're basically exactly where we were about a month ago. And as you mentioned, this is the worst quarter for the S&P since the first quarter of 2020 that we saw. And it's been particularly painful for investors. One of the things we were talking about before was this revaluation of tech companies, and are some of these still going to be considered tech companies, Netflix or Facebook? And one of the things that we think is happening right now is really this is the end of the consumer internet boom. And Meta being relegated into the value bucket is probably one of the crowning signals of that. And that's perfectly fine, but then, well, where's the growth going to come from in technology? And where we see it coming from is in enterprise cloud. And the data that we're seeing today tells us that where the digital advertising industry was back in 2017 is very similar to where the cloud enterprise software industry is today.
So do you put Meta in the value bucket? Is the growth era for that company over?
Well, it might actually be a great thing for investors if people really do value it as a value stock, because there's very few value stocks with that type of margins and growth rates going forward. So Meta is far from a dead company as far as we're concerned. I think the inability of the business to make acquisitions over the past few years has really hurt it. And I think that's going to be one of the biggest questions going forward, is that the regulatory environment for Meta has quietly improved. And if that is a sign of things to come, we think that will continue to help the stock, in addition to the fact that it's just so darn cheap.
Interesting, but don't you want growth to come from innovation and not acquisition?
Well, you can't fight capitalism. Sure, Meta's going to develop plenty of products that some are going to work, some aren't. Their marketplace business generates a little bit of money for them today. They're finding new ways of onboarding advertisers through that. And as long-term investors, yeah, of course you want the products to be built, but there's too many. We talked about Pinterest being such an attractive takeout candidate. The amount of time and investment that it would take to recreate Twitter, to recreate Pinterest, to recreate what you saw with the LinkedIn acquisition at Microsoft. We think there's just too many attractive assets in the market right now to justify having to build things from scratch when you can just bolt them together and make a stronger company.
So how are you parsing out the enterprise software category? It's really easy to understand what Meta is. It's easy to see Instagram and WhatsApp and the Blue app and how all of those things fit together. But when it comes to enterprise software, it's a lot more confusing. How do you distinguish between what's a good play and what's not?
It is a lot more work because you don't get to just use the products yourselves. You've got to talk to the executives and the companies that are using them. One of the biggest trends in enterprise technology has been this move from systems of record, so Oracle and Salesforce that are basically complex databases, into systems of action. And so this is the ServiceNows of the world. This is data happens in the company, that data runs through some system, and then that system tells an employee or another piece of software what to do. So these systems of action are incredibly powerful. There's a lot of lock-in, and we're still relatively early in the curve. You had a great interview with Blake Lemoine, in the last week. And, one of the things I can't help but think about, is that a lot of people already work for software. Our software is telling us what to do. And it's been this evolution of these systems of action that are driving it. But that's a productivity and it's an efficiency thing. And I think it's one of these things that is inevitable. And it will certainly go too far, like we've seen with some of the data capture on the digital advertisers. But I still think we're relatively early in the adoption of these systems, and it's been a pretty exciting place to invest.
Appreciate, Robert, that you are always watching. Thank you. Is the second half of the year going to be better than the first? What do you see in the next 6 months?
Well, growth rates are going to naturally, rise no matter what. It's already, because we're comping, the worst or the strongest first half to last year. So e-commerce growth rates are generally going to recover. I certainly make no prediction about share prices, but prices right now are really good. And Mark Mahaney is obviously waiting for inflation to get better and is waiting for estimates to keep coming down. But if you look beyond the next 12 months, estimates are really conservative 3 or 4 years out. So for investors that have a long enough time horizon, you're even seeing a lot of hedge fund investors that invest in both private and public markets. They're shifting funds now from private into public. It's Sequoia saying, hey, we want to have public funds attached to what we're doing. So there's a lot of signals out there from really experienced investors that the public market is actually offering some of the most interesting opportunities right now.
All right. Robert Cantwell, Up Holdings. Always good to have you with us. Thank you, Robert, for stopping by. Meantime, TikTok rival Triller still going public, but on its own. The U.S. video sharing app filed paperwork for an initial public offering of its Class A common stock with the SEC. This after ending its $5 billion merger with the video ad software provider SeaChange International. The merger termination is effective immediately with NASDAQ, a NASDAQ listing expected September. Coming up, the SEC rejecting Grayscale's Bitcoin ETF bid. We will have more on how the crypto investment firm is retaliating and how the crypto market meltdown is taking one big tech company down along with it. This is Bloomberg.
We've been, guided to believe that it could be, call it 9 to 12 months on that decision. It could be a little bit longer, it could be a little bit shorter, but we hold strong in our common sense arguments around the ETF conversion, and have a fantastic legal bench that will be arguing this case on behalf of investors.
Grayscale CEO Michael Schonenstein there with Bloomberg earlier. The crypto investment firm says it has sued the SEC after the agency rejected a bid to convert its Bitcoin trust into an ETF. Our own Shonali Basic here with more on this. Shonali, not necessarily unexpected, but what's next?
Yeah, what's really interesting here, Emily, is that this is not only a big deal for Grayscale, where there was a huge demand from clients and customers to have this trust converted into an ETF, but a lot of frustration here that there are Bitcoin futures ETFs being approved when spot Bitcoin ETFs are not being approved at large. Of course, we know there are many of them that are waiting for approval, planning on filing again. I think back to a conversation I had, for example, with Anthony Scaramucci that really had talked a lot about how an approval of an ETF like this could really start to have a huge inflow of more institutional money, for example, into Bitcoin. And of course, this is a huge roadblock, not just for the crypto community, but for Grayscale itself that now has a trust that's trading well below its net asset value, 30% or more below its net asset value. It had a big drop off today as well. And this will be, for Grayscale, a long road ahead, another 12 months or so to work through a lawsuit, according to both Bloomberg Intelligence and the company itself.
Also, some not good news for CoinFlex. You and I interviewed the CEO, Mark Lamb, exclusively earlier this week about their withdrawal transaction issues, said that those would be over by today, and that he was very confident that he'd be able to get that done. Take a listen to what he had to tell us back on Monday.
Yeah, I'm highly confident. We have spoken to people nonstop on phone calls and in-person meetings since this issue arose, and we have more than half of the amount needed in soft commitments to get this done.
Well, today, Shonali, CoinFlex came out and said they aren't going to be able to make the deadline. What happened?
Yeah, I think it's really interesting, Emily, both for CoinFlex and also for an entire industry that is suffering through liquidity issues, other companies as well. Remember, when it comes to CoinFlex itself, since that interview that we did on Monday, we have Roger Ver coming out and saying that he has no debt to CoinFlex and being reported as the big customer that we've been talking about that had a margin call when it came to CoinFlex. So this dispute between Roger Ver and CoinFlex itself made this token offering, which was supposed to make that kind of margin call issue whole again, difficult in terms of both raising money and making other customers whole and restarting withdrawals again. Let's move over just really quickly here to talk about another company, Celsius, which also paused withdrawals about 2 weeks ago. How all these companies are restructuring is fascinating. They came out with a blog post today also saying that they are discussing both strategic transactions as well as restructuring their liabilities, but not a lot of detail there on what that could necessarily look like. Of course, there's a third firm, there's BlockFi as well, and a lot of news around Sam Bankman-Fried and FTX nearing a deal to acquire it as this industry starts to get out of the slump.
Indeed. All stories we're going to continue to follow. Bloomberg Shonali Basic, thank you as always. All right, more now on the impact of the crypto plunge on the world of chips, and especially one chip maker in particular, that is NVIDIA. I want to bring in Bloomberg's Cecilia D'Anastasio on this. And of course, we've seen Bitcoin fall below $19,000 a couple of times over the last 2 weeks. This is not just not good for crypto investors, but also NVIDIA, which made a big bet on this technology. Tell us what's happening.
Sure. So the crypto boom generated a lot of interest in NVIDIA's game cards, which typically gamers use to play really high resolution video games on their computers. Crypto miners, however, do create cryptocurrencies, particularly Ethereum, through use of the game cards themselves. So there was a huge rush on the cards in 2020, along with a boom in crypto. Unfortunately, now that crypto has crashed, NVIDIA itself has experienced some of that sort of hangover.
So what's next for NVIDIA?
Yeah,
how will this change their strategy?
NVIDIA has danced back and forth between kind of working with crypto and sort of distancing itself from crypto. Gamers are its primary market, and the crypto industry is extremely volatile. So right now, NVIDIA is kind of trying to detach themselves from that industry and market primarily to gamers.
All right, story we're going to continue to follow. Bloomberg's Cecilia D'Anastasio. Cecilia, as always, thanks for joining. Coming up, we're going to take a peek at the summer season with 4th of July travel about to get underway en masse. Will the flight cancellation nightmares continue? We'll have that and more with Peak CEO and co-founder Rizwana Bashir next. This is Bloomberg. Airbnb shares fell to a record low amid heavy travel disruptions in Europe as major airports asked carriers to cut capacity. Shares closed down more than 5% after data showed U.S. consumer spending fell in May for the first time this year. Airbnb is down more than 46% so far this year, despite economies reopening and leisure travel returning around the world. Meantime, the holiday travel nightmare is back with a vengeance. Flights across the board are being canceled from Europe to Canada to the United States due to the strain on global airlines, as airlines are having a tough time scaling back up to quickly meet booming demand post-pandemic. For more on this and trends to see ahead, Rizwana Bashir joins us. She's the CEO and co-founder of the booking software and marketplace Peak. Rizwana, great to have you back here on the show. So what's your take on this global travel debacle and how long this goes on for?
Yeah, I think unfortunately, we've all seen it. Flights normally get canceled at a rate of about 1.3%. Right now, they've already doubled year over year since last year. And, very recently, we've seen that go up to about 5%. Flights being cancelled in the last couple of weeks, and a huge amount of delays. As you've seen, there are big labor shortages going on, and about almost a quarter of flights are seeing major delays, especially in hubs like Chicago, New York, Dallas, Miami, Los Angeles. And so this is a serious thing. We've got nearly 50 million Americans who are planning to do some 4th of July travel. People do not want to put that off despite some of the challenges in the economy. And so we will see record levels of people going out and traveling again, but the disruptions are here and pretty serious and something to bear in mind if you're planning to travel right now.
So what are you expecting to happen over this holiday week? Trends you're spotting in particular?
Yeah, we are definitely seeing that the amount of international travel and flight travel is much higher than it's been in the COVID era. I would also say that local experiences are up a lot, and the kind of things I think that we've seen people seeing as the top 4th of July experiences have definitely been things that might be considered a little bit more special. So shark diving in Miami, being able to go kayaking on the Chicago River. There are also some really cool and interesting experiences, jet skiing around the Statue of Liberty. And so definitely a lot of stuff, people getting outdoors on the water, making the most of the summer weather. But with 50 million Americans traveling, you're going to be seeing very, very busy attractions and experiences, as well as airports. And I think, you're going to see very congested highways as well. Road trips will be up.
Shark diving in Miami, that sounds fun. Look, you just won the Entrepreneur of the Year award from EY. Congratulations on that. Peak also just launched a partnership with JetBlue. What are your priorities for the year against the context, the backdrop of what's happening in the macroeconomy?
Yeah, I think what we've seen, for us as a business, we're basically Shopify for experiences. We help people book fun things to do, and we provide software for small businesses and large businesses to be able to get online. And so certainly the last couple of years, we saw that our businesses and the partners that we work with were hit pretty hard, right? And so we've had a lot of scale, nearly $2 billion of experiences through the platform. And you definitely saw that over the last couple of years, there were winners and losers. As we come out of the COVID pandemic, we are definitely seeing that consumers want to travel and they want to do experiences. And despite some of the things that we've seen with inflation and some of the recessionary kind of dynamics that we're seeing play out, people are still wanting to do that. And so we're not seeing that go away. Certainly for us, a few months ago, we just closed an $80 million round led by Westcap and Goldman Sachs with the former CFO of Airbnb, Lawrence Tosi, joining our board. And so we're seeing a lot of momentum in our space and we're seeing a lot of opportunity. And I think as we go into this next phase, of the next year, we are definitely helping empower our operators and partners that we work with to be able to get through, what will, I think, be some more challenging macroeconomic conditions. In this environment.
Interesting that Lawrence Tosi, the CFO of Airbnb, of course, former CFO, joined your board. We just heard about the stock there being down. How do you distinguish, Peak and the future of the business from what we're seeing with a company like Airbnb, which, can be some sort of a barometer for consumer sentiment? Like, how are you as an entrepreneur, and what advice are you getting from investors about how to weather, a potentially significant downturn?
Yeah, I think one of the things that's very interesting about our business is that, first, we were profitable when we raised this $80 million round. And so we're a rare kind of, I think, tech business that had taken unit economics and profitability very seriously. And so we're actually in a fantastic position today around being able to continue to invest in growing our platform and helping our businesses get through this. I think also, our focus has actually been on the software side. So rather like Shopify, we're working with thousands of businesses and helping them take their business online, allowing their own website to be able to have real-time availability and online booking. And so in doing so, the average business that partners with us sees their revenues increase by about 30%. And they see them saving a ton of time, hours and hours of automation that we provide. And so I think as we go into this macroeconomic climate, we're hearing from large businesses like museums all the way through to smaller businesses saying, we know that the bottom line really matters now. And it matters to us that we find ways to cut costs and grow our top line in an environment where perhaps there won't be as many travelers, rather like COVID, but there will be a local substitution effect. We think that people still need these moments of connection and joy. And what Peak really specializes in is everyday adventures. So the average experience on our platform costs about $50 to $100 per ticket. And so this is an environment where we will see businesses needing to make this leap forward on automation and technology, which helps them save costs. But we'll also be seeing, I think, consumers not maybe being able to do as many of these big trips, this summer being a place where a lot of people were able to go out and do that, and moving to local experiences within about 50 miles to be able to do fun things close to home.
Museums, ice cream, sounds great to me. Rizwana Bashir, CEO of Peak, good to have you back with us. Thank you for stopping by. Coming up, it is something that I've spent years reporting on, and that is bro culture in the tech world. Finally, Washington is starting to pay attention. Joining me next, Congressman Stephen Lynch, who led a hearing on, quote, combating bro culture today. I'll also be joined by investor Sarah Kunst. This is Bloomberg.
The real reason that diverse fintech CEOs don't get these dollars relates to the fact that women and diverse leaders control a very small percentage of the $330 billion venture capital dollars spent just last year. Broadly speaking, 86% of investment decision makers are men. Given that venture capital is very much a pattern matching business, investors often back companies and people who are most like themselves.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. That was just a taste of a hearing held earlier by the House Financial Services Committee called Combating Tech Bro Culture. It's something that I've been researching and reporting on for a few years, and I want to talk more about the ongoing issue with the person who led that hearing today, Democratic Congressman Stephen Lynch. Representative Lynch, thank you so much for joining us. I'm so curious what led you to take on this issue. What do you think Washington can do about decades of sexism in the tech industry?
Well, first of all, thank you, Emily. I know you've done a lot of work in this area, and I've heard you on previous shows commenting on this issue. So the numbers are stunning here, as Sally Krawcheck in your earlier recording demonstrated. The billions of dollars going out the door every year from venture capital firms to fintech startups, I think it's less than 2% go to women. 1% perhaps go to Black entrepreneurs, less than 2% to Latinx founders. So the numbers are just stunning to see that the bulk of this money never reaches any minority or women founders. So we had this problem years ago in the banking industry. They used to have redlining, and this is sort of a redlining what they're doing here. So back in the day, a lot of banks would never invest in those redlined areas. Largely, they were minority areas. And so what Congress did back then was we passed the Community Reinvestment Act. And one of the things we did was we created a scorecard, a report card that allowed depositors and investors to realize how that institution was doing in terms of their investment in minority areas, because that's something that socially we thought was the right thing to do. So I think what we need to do is the same thing with venture capital. I think we need to give them a scorecard. I think the SEC needs to track how well inclusionary measures are adopted by these VC firms so that women and minority founders can participate.
Interesting. Sally Krawcheck, longtime former banking executive, founder now of a company called Elvest, also testified at the hearing today. We pulled a portion of her testimony. Take a listen to what she had to say.
The real issue is that few fintechs center on women's needs, a direct result of women entrepreneurs starved of funding. As a result, your women constituents invest less of their money than men do, losing out on historic market returns and costing them hundreds of thousands, for some women millions of dollars over the course of their lives. And it's one reason why the gender wealth gap is at 32 cents to a white man's dollar and 1 penny for Black women, and it's been widening.
In hearing the personal stories of some of these founders, Congressman, what was most alarming to you about what you heard today?
Well, I think that how hard and we had several successful startup entrepreneurs that came before the committee, and hearing how hard they had to work and going to 30 different interviews and basically begging for investment in their products, you could see how hard they had to fight to break through. And that not only denied them the opportunity, but they had great ideas. They had great substantive ideas that actually were a great benefit to society in general. So we've got to find a way to break through or just make these VC companies more aware of what's out there. Oftentimes they're supporting hundreds of different ventures, hoping that one of them might be successful. Yet in that process, they're totally ignoring many of the viable substantive proposals made by women and minority founders.
Silicon Valley has made some progress since Silicon Valley's own version of the Me Too movement. Now, 5 years ago, I wrote about this in my book, Brotopia, Breaking Up the Boys Club of Silicon Valley. But obviously, I think most people would agree, not enough progress certainly has been made. I know Congresswoman Maxine Waters, the chair of the Financial Services Committee, made a surprise appearance today. Would you say that there is broad consensus across Congress that more diversity in the financial technology sector is critical?
I think so. We had a bipartisan hearing today. I welcomed the comments of my Republican colleagues, Mr. Davidson of Ohio and Mr. Steil from Wisconsin, both staunch Republicans, conservative, but they realized that this is good for business by including those ideas, and they acknowledged that the work of some of our minority founders who were testifying today was very, very important to the industry at large. And so, that's diversity is good for the economy as well as a social good.
All right. Well, it's certainly interesting to hear some of the things that you're working on, ways that Congress could act. Congressman Stephen Lynch, thank you so much for joining us and for taking on this issue. I want to continue the conversation now with a woman who has spoken up about bro culture in tech and venture capital, Sarah Kunst. She is the managing director at Clio Capital. She's been vocal about the sexual harassment she had to face in this industry. She was a character in my book, so I appreciate you and you using your voice in that instance. It's now been about 5 years since you spoke up, and your actions actually led to consequences for one particular individual. But how much progress do you think has actually been made in the last 5 years?
You know, unfortunately, I don't think a lot of progress has been made, right? I think that now when women speak up, they're believed more. I think that people know that, you know, this is a problem, but you look at the actual numbers, as the congressman was saying earlier, they're really, really bad for both race and gender. And they're even worse at the intersection when you look at the number of Black and Hispanic women who are VCs, who get VC funding. It is almost non-existent. I am almost a rounding error, right? And then, you know, you look at what's still being upheld. People like Elon Musk, the richest man in the world, CEO of, I can't even count how many tech companies right now, trying to add Twitter to that. And he was just credibly accused of sexual harassment on the job. And the response was to fire the employees who had a problem with that. So, you know, have we really come that far? I don't think so.
How much does the thought of Elon Musk owning Twitter concern you?
Honestly, I'm kind of relieved because it might actually force me to log off Twitter forever.
Okay. Now, we heard part of Sallie Krawcheck's testimony there. You are actually an investor in Ellevest, and I'm sure that you're very familiar with her own experiences as a woman on Wall Street and then Silicon Valley. What are you seeing through the eyes of entrepreneurs like her in terms of the barriers that still exist?
I mean, Sallie Krawcheck is one of the most famous women in banking, and it's still hard for her to raise and get the same valuations that a guy in a hoodie can get for a half-baked idea. There's something wrong with this system. And, you know, there's not enough diverse investors, there aren't enough female investors, there aren't enough investors of color who can turn around and you know, recognize, you know, greatness when they see it in their peers. And so, you know, things need to change on a lot of levels because we're just missing out on so much money in the economy, so much wealth generation because we're not funding nearly enough people who aren't white dudes.
Now, a congressional memorandum actually called out 3 major players in investing in technology: Andreessen Horowitz, Y Combinator, and Sequoia. What do you make of that? And have they made any strides? Certainly some of those firms have added some more women partners since Me Too.
Yeah, you know, I think that to some extent they were calling them out as examples of, hey, here's what exists in the ecosystem. You know, I think that there are a lot of the legacy firms that are trying to improve. They're hiring more women. They're launching earlier stage programs where you often see more diversity, you know, come from versus just doing later stage. But I think that the entire industry has a long way to go. If only those 3 firms were underweight on diversity numbers, this wouldn't be a problem. The reality is the entire industry is behind.
Okay, so what needs to be done to make real change and not maintain the status quo? I mean, there's obviously something to be said for being a bad actor in the system. There's also something to be said for just accepting the status quo.
Yeah, you know, I think we've gotten some bad actors out over time over the last 5 years, in large part thanks to books like yours, but there's a lot of, like, call it not so great actors that remain. And I think that the question is, how do you make it clear that you have to have a diverse investment team? If you're a limited partner, if you're a university endowment or a pension, you have to deploy capital to diverse investors or funds that have diverse investors, and you have to back diverse founders. And those are the 3 things that just have to happen.
There was a lot of concern that women would backslide during the pandemic. We saw women leave the workforce. Women, you know, were often the first to leave and take care of their families. Are you concerned that that's going to happen again in this current
Oh yeah,
downturn?
It always happens. It always happens, right? We see this time and time again. You know, what we're going to see is that the funds that struggle to raise are going to be disproportionately, you know, women and people of color led. You know, that the companies that struggle to raise will be the same. That, you know, when those companies fail, it'll be seen as sort of a moral failing rather than market conditions. You know, Black founders had a slight uptick in funding in 2021 following the Black Lives Matters protests, and that's gone. And, you know, with market conditions the way they are, I think it's incredibly hard to assume that it's going to be a good year to be a woman or person of color in this industry.
What are you seeing behind the scenes in the downturn? What's happening with, you know, private rounds, valuations, layoffs?
You know, there have been some layoffs, and I think that, you know, the goal with layoffs is always, you know, cut once, cut deep enough that you don't have to keep doing it. And I think we'll see in coming months if that's been true for a lot of these tech companies. There's a massive amount of hiring slowdowns. And, you know, with my own companies, I'm seeing a lot of inside rounds. So they're not the splashy headline grabbing rounds, but, you know, founders are quietly going to their existing investors or a few new ones and saying, hey, you know, I'm going to bring in, 10 million more, 20 million more, at the kind of Series A or B level, just to tide us over so that we have 3 years of runway instead of 18 months, because we could be in this downturn for a long time.
Are investors open to that?
I think investors are doing it hand over fist. I think it's even going to be an interesting opportunity for some of the hedge fund crossover funds, because you're now looking at companies where they're raising at, massive discounts to where you might have thought they would have been 6 months ago. And, if you have dry powder, which venture capital has been raising historic amounts of money over the last few years, there's a lot of dry powder. And I think people are going to deploy it to get some deals.
How are you evolving your strategy? I know you've gotten into crypto. I mean, are you still bullish on crypto in this environment?
I am always bullish on crypto. I was early in the space and I continue to be early. I'm an investor in companies like Gemini. And look, I think in crypto, what we've seen when you look at the historical Bitcoin price charts, in particular Bitcoin, right? So not the Lunas of the world, which have had these big public debacles, not the NFTs. I don't want to own a picture of a line drawing of an ape. But when you look at Bitcoin, right, what you see is that historically crypto winter hits, the price goes down, and then 12 months later, the price starts to go back up. So it becomes a great time to buy when there's a downturn if you're a true believer.
So speaking of a subculture of the tech industry that has been very male dominated, that is cryptocurrency. I mean, what are you seeing there? Are you seeing any progress or the same urgency to change that we see or hope to see in the broader tech industry?
Yeah, I think that crypto is unfortunately, like the rest of the tech industry, it's male dominated, like finance, right? The two industries it straddles, it's pretty male dominated. There are certainly some very bright spots like Emil Choi at Coinbase. But, I think that the industry has to fundamentally change, and it's the same VCs funding crypto companies as funding tech companies. So of course you're seeing more men get funded.
All right, Sarah Kunst, Clio Capital Managing Director. It's great to have you back. Thank you, as always, for your voice in this conversation. Coming up, we're going to talk more about sexism in that different part of the tech industry that is crypto. I'm going to be joined by Tegan Klein, a crypto investor and a founder. Her perspective next. This is Bloomberg. Time now for our crypto report, and as we've seen, Bitcoin is on track for its worst quarter in more than a decade. This as a string of high-profile blowups crush confidence in the sector. Its 58% plunge is the largest since the third quarter of 2011, and according to data compiled by Bloomberg. Are we nearing the bottom? Let's bring in Tegan Klein's read on all of this. She's the co-founder of the Edge and Node, the company behind the Graph protocol. Think of them as the Google of blockchains. Tegan, thank you so much for joining us. I do want to talk about your personal experiences as a founder and investor in this space, but first, let's get a comment on the market. Bitcoin dipping below $19,000 for the second time in 2 weeks. It's all looking a bit grim. How much longer does it last?
Yeah, I know there was quite a bit of a liquidation cascade, and generally that will take 6 to 9 months to recover. But the exciting thing that I'm seeing is that centralized finance is what broke. It's not DeFi that broke or decentralized finance. And decentralized finance actually held up very well. And so I think that there's actually a big opportunity right now to get involved in the crypto space for many of the viewers that haven't yet, especially within Bitcoin and Ethereum, because the development in Ethereum has continued. We're seeing developers at the highest point we've ever seen, and there's so many brilliant minds coming back into the space, so the fundamentals are quite strong.
Now, you started your career on Wall Street and left to join the crypto industry. How would you compare and contrast those two cultures?
Oh, yes, very different. I would say that my time on Wall Street, it's very different personalities, a lot of very strong personalities on Wall Street, sharky behavior, which does exist within the crypto space as well. But when it comes to the protocol layer and the builders, I've actually had a lot of really great and friendly experiences in this space. And when it comes to women in the crypto space, I think many are there to really lift other women up, which wasn't my direct experience on Wall Street, unfortunately.
So would bro culture be a fair characterization of Wall Street and not of crypto culture?
I would say in my experience, yes, very much so. It does still exist within the crypto space. There are a lot of tech VCs from Silicon Valley that bring that culture in, and they also invest in founders that are a little bit more bro culture. But the great thing is that in crypto, you have crypto native VCs, and many of those crypto native VCs are really open to more diversity, and they have an emphasis around diversity, but also a diversity of ideas and also founders. So that's an exciting piece within the Web3 and crypto space.
So how do we keep the trend going then? Whether it's more female executives at crypto companies, getting more women investing in cryptocurrency in general? I mean, wouldn't that all help keep the crypto industry from falling into the same trap that tech has over all of these decades?
Absolutely. I think that that's a really important point. I think we need to invest in women, and we also need to get women on the cap tables so that companies are taking female investors as well. It's so often that I see cap tables that are all men. And I think when we see that, we have a responsibility to call it out, not just as women, but also as men. Men need to add women to their cap tables, and other men need to call out that kind of behavior. And then it's also important to hire strong women that support other strong women, I think, and adding women to leadership roles within companies. And that's one thing that I've really taken seriously as a founder within the space. It's important to bring really strong women into the company and leadership roles and give women power.
What are some big misconceptions about the crypto industry that we should break open to get more women involved?
Yeah, I think one big misconception is that you have to be technical, you have to be an engineer. You don't. There are many different roles, and we welcome female engineers and female coders into the space, of course, but we also need marketing, we need designers, we need people that raise capital. And so every skill set that exists in the world is also needed within the crypto space. And there are so many different communities in the crypto space that you can belong to, different communities across many different asset classes and use cases.
Now, we were speaking with Congressman Stephen Lynch earlier, who just chaired this hearing on combating bro culture in fintech. He talked about things like the SEC potentially regulating or taking a closer look at executive teams of tech companies. What would you like to see from Congress? What could Congress do that would make a difference?
Yeah, it's unfortunate that Congress has to step in here and that we're not self-regulating and do this ourselves, because I think that we are very much capable, and it does feel like we are on a positive trend. But I would like to see all of this kind of called out when you see bad behaviors. Having women on your show, you're a great example of this, of raising other women up. But there are some conferences where it's only male panelists or only male speakers. So when we see that kind of behavior, I think it's important to call it out.
Tegan Klein, co-founder of Edge & Node. Tegan, thank you so much for joining us to share your perspective and breaking open some of those stereotypes. All right, much more ahead. Stay with us. This is Bloomberg. Few other stories we continue to watch. Amazon was dealt a blow in federal court after allowing a female employee to move forward with a discrimination complaint in California. This woman claims Amazon offered her husband, quote, substantially more in wages when applying for the same job, despite the couple's comparable qualifications and experience. She also says the company retaliated against her for filing this wage discrimination complaint, refusing to interview her for a promotion and being denied scheduling changes. Also, a former Apple lawyer pled guilty to insider trading between 2011 and 2016. According to these charges, Gene Levoff traded on confidential revenue and earnings. Over his decade-long career at Apple, Levoff was one of the most senior executives, reporting directly to the company's general counsel. Apple fired Levoff in September 2018 after placing him on leave. And that does it for this edition of Bloomberg Technology. Do not forget to check out our podcast. You can find it anywhere you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.